welcome to the DevReady Podcast. Today we've got Caitlin and Alex joining us from RnD360. Thanks for coming in, guys.
No worries.
Just tell us a little bit about your background, Caitlin, Alex, what you've been doing and how you got involved in R&D.
Yeah, so my name's Caitlin. I started off with studying science and always really passionate about science and innovation. I did chemistry initially, Bachelor of Science, but I was sort of wanting to go a bit further than just working in a lab. So post-grad went and studied a Master of Business for Science and Technology, which is a course that's all about teaching scientists and engineers how to commercialise technology.
Nice, okay.
Also a bit of an entrepreneurship type course. And after that worked at CSIRO for a little bit, doing strategic analysis to work out, how their research is going and the commercial viability of research. And after that landed in R&D Tax, which tax is not normally your next foray after being really interested in science, but it's a very niche area of tax legislation, and it's all about helping companies get funding support for their research. So I did that in KPMG for a little bit in Australia and then over in London. And then when I came back, I'd met Alex at KPMG and the two other founders of the business, Mark and Martin, at KPMG. So I'll hand over to Alex, who'll probably explain the next sort of chapter.
All right. My background is electronics engineering. I actually finished ComEng at RMIT, and I worked in the industry for about 23 years.
Yes.
I sort of designed hardware, software, embedded software, application software. My last job was actually working for a company called Ray Innovations, and they sort of specialize in biomedical devices. The project I was working for was air traffic control system for military and civilian applications. And then one of my friends was actually working at KPMG, and I started doing the MBA just to fill in the days.
Just something to do, Alex.
And
nice little hobby.
She mentioned that there was a job going at R&D Tax, so I always thought, like grass is always greener, and I decided to go and sort of work for the dark force. I never knew what R&D Tax was, but certainly. Ability to work with innovation companies. I always sort of was interested in various areas of technology outside of electronics. Sort of ended up and spent 14 years at KPMG, and then a couple of years at PwC. And then my business partner, Mark and Martin, we decided to start our own sort of little consultancy group called RnD360, which basically provides the expertise that usually sits within the big four accounting firms, but provides it for small end of town at a reasonable price. And here we are 2 years later.
And we've been working with you for a little while now, so through PwC, KPMG, and now RnD360. I think it's about 6 years now.
Yeah.
So what got you interested in R&D Tax? So you were clearly building technology, working on flight traffic control systems. What was interesting about putting together documentation, helping businesses generate some extra revenue from government to help them build tech?
Yeah. I suppose when you are a technical person and working in R&D, and it's very rarely you particularly when a young engineer, you come across the financial side of things. Technology is what you concentrate on.
Yes.
But then as you progress through the years, as people start asking you these questions, can you allocate some budget, and how does it actually work, and what's the return on investment? And so it's all sound foreign to me, but at the same time, you sort of realize that without going through those hoops and answering those questions, none of the projects that you actually want to do will ever get off the ground.
Okay.
And then there is this other unknown sort of scarecrow thing, which is tax. It comes in unexpectedly and hits the companies, and suddenly the projects grind to a halt because you have a debt to the ATO, and that's adds another level of complexity. And I think at that point in time, I was quite interested in how do you actually untangle that complexity.
Interesting. Okay. And Caitlin, yourself? So
I think
what was the jump?
Similar thing in that we really help. You see, it's very rewarding to see companies really benefit from R&D Tax funding, and you really see that it does help incentivize projects and helps companies that are really starting out, but also well-established companies commercialize new technology. That for me is very rewarding. Also, just the variety that we get day to day is pretty interesting. You know, we work with lots of different companies from FMCG, you know, large FMCG companies to small technology software companies, and everything in between. So it's quite an interesting career to have.
Yeah, all different projects, all different varieties of R&D, I would imagine.
From our perspective, it's a fairly creative
yes
job as well in the write-ups that you need to do for some of those projects.
Yeah, it's quite an interesting style of writing to articulate why projects are eligible and they are entitled to this funding. So, and we have to do that for different scientific disciplines, from geotechnical engineering to software development, and you know, all sorts of things. So
So today we got you on really just to have a brief chat around what R&D tax is. Now, we're talking to non-techs really building technology. They can be in startup land, they can be in businesses as well that are looking to invest into their own IP. What's the starting block? I'm building some tech. What do I need to know about getting access to some R&D incentives, and where should I really start if I perceive that I could be doing something that could get some benefit?
I'll have a go at answering that one. So, as the first starting point is your company eligible? So, only certain types of companies or entities can claim. So, the first question we normally ask is, do you have a company that's incorporated in Australia? If you don't, there are other types of companies that can qualify for incorporated in a foreign company, where there's a double tax agreement. All these other things play into it. But normally, if you've got a PTY Ltd company, that's a good starting point. There are other criteria, so certain entities can't claim trusts, for example, or limited partnerships. So that's the first starting point, working out if you've got an eligible entity that you can make a claim in. The next hurdle is around the R&D itself and whether or not it qualifies from a technical perspective. And there are a couple of things we look for. So the first thing is, what are you building? So you need to have demonstrated, or you need to be able to demonstrate that you intend to develop something that's new or improved, and it might be a product, a process, a system, or a device. In doing that, you need to be developing new scientific or technical knowledge in a particular field. So that might be in software engineering or in other scientific fields.
New as in new to everybody, or new to your organisation? New
to the public domain. So it might be new to the world, or if it's not new to the world and a competitor is doing it, for example, the knowledge on that new knowledge can't be publicly available. So there's an expectation there, if you're a startup and you're developing a new technology, that you'll do a Google search, you'll do literature reviews, you'll do a decent amount of background research to make sure that you're not repeating something that's already been done before. The key thing that we look for is an experimental process. You need to be able to demonstrate you've done a core R&D activity, and that's something that proceeds from hypothesis through experimentation, through a systematic program of work to an outcome. So you need to be able to. A hypothesis is really a problem statement. So you propose a particular solution and you test that hypothesis.
So you're going in blind. You're just assuming that, yes, we might be able to do this, and this is the way we could approach it, but that could change too, I imagine.
Exactly, and you need to be able to articulate that there are unknowns associated with that experimental method. So, you know, there's no feasible way, based on the level of publicly available information in the domain, that you could reasonably predict what's going to happen. So you need to be able to say, oh, well, all of these 3 or 4 things could go wrong. For example, if you're developing a predictive algorithm for a software program, based on the information and the data that's already out there, you really cannot predict whether or not that algorithm is accurate or reliable or scalable. So there's those sorts of considerations that they're the key things that we look for.
So there's a bit to think about there. So there's complexity of what you're building, clearly. So something run of the mill is nearly not going to cut it. If you're building a basic data management system, potentially going to have some trouble getting some R&D tax incentives, I would imagine. But if you've got some, I don't know, AI is a buzzword now. If you're building a bit of AI, algorithmic stuff in the background that you don't know about, not sure about, that's something that potentially you might be able to claim.
The Oz Industry, so one of the regulators of the R&D Tax Incentive, they're releasing a lot more guidance, or they have recently released a lot more guidance around software development. So we can help companies understand that, because it is a complex area. But routine software development just won't won't cut it. You need
Okay.
to be able to do something that's demonstrate you're doing something that's quite innovative. Alex, I'm not sure if you've got any.
I remember in the past, if the company had a website,
Yes.
They actually were tempted to claim because
For the website?
at the time, because at the time, the websites were something new.
Yes.
Nobody knew how to do them. They had to almost handcraft them using raw HTML.
Yes.
And at the time, the technology progresses. Claiming the website is no longer an eligible activity. But having said that, there are websites and there are websites.
Yes, correct.
And some websites might look very simple, but behind this simplicity could be a lot of complexity and a lot of internals or algorithmic work that actually make it look simple. So from that point of view, if you're building something that got a lot of technology behind it, but
Yes.
reasonably simple sort of in the front, there certainly might be R&D there as well.
So can we jump into some examples of what is claimable and what's not? So what have you seen along the journey of things that customers have perceived to be claimable but haven't? So give us some examples of that so people get some clarity on what non-claimable things might be.
What an activity that they're doing is worth trying to claim.
Yeah. Probably just to go by the guidelines that's provided by the regulator.
Yes.
They say that like routine software development. Now, how do you define routine?
Yes.
They say like user interface design. They say that cannot be what they call the core activity. It's not like an experimental activity.
Okay.
Some simple sort of database design or accounting system sort of add-on that you put in for or payroll system. So essentially, it's something that you get a well-trained professional and you just give them a task and they just go through the motions and execute it. And of course, everything in software needs to be tested, but really the outcome is never in doubt. Like if it's not that guy who might be claiming to be a professional but not good enough, not skilled, you might get a skilled person to actually to do that. On the other hand, there are some things like when you develop, let's say, a predictive algorithm, or you're trying to get your system to scale to God knows how many users.
Yes.
And you want to do it linearly without kind of building that algorithm or coding it first and then sort of running it through, developing a system to test it initially in your own office somehow to develop an emulator for what are you actually going to be testing, then actually finding a client that is friendly enough to actually to be a guinea pig for you, and then eventually releasing it into the wild and just still observing, what's actually happening with your system and whether some of the things you could not potentially even encounter unless you actually test it in a real life environment. So from that point of view, just recording these trials and tribulations as you go through, that's and putting it probably like in the form of a diary, or if you put it in Jira or something like that, but essentially saying that there is an experiment going on and we're testing for certain criteria. So that will provide you the evidence that is needed, because unfortunately the regulators, they're actually evidence based, so you have to have you have to provide them with something that they will actually say, yeah, we understand, and that's a document, and it has to be contemporaneous as well. So and I think the more sort of you record, like I think probably to step back from the IT world into the science world as we know it. In the past, scientists working in the lab would have a lab book, and in the lab book they would actually
note
record,
everything down, right?
note everything down.
Yes.
Nowadays, hardly anybody uses notebooks. They might use iPads and stuff like that. But you have to create an equivalent of that notebook, which essentially be primarily useful to yourself, and maybe if you're a researcher or a developer, if your boss comes to you and says, what have you been doing lately? You can actually kind of produce it and say, I've been working on this, I've been testing this, I've been testing something else. So essentially, imagine the regulator, or like from ATO or the industry, they're coming in and asking you. So if you can produce something like that, it's a gold standard.
Okay, so it's a journal basically of your
correct.
activities throughout the process.
That's correct.
Okay.
A couple of areas that clients sometimes raise and want to know if there is R&D there. Like one area is often data migration is something where the software guidance specifically says it's not necessarily easily able to demonstrate that it's a core R&D activity. It might be supporting ongoing experimental activities, but data migration itself is probably not something that's a core R&D activity. However, if you develop a complex coding algorithm or a specific software program that enables you to do that faster, or for complex data formats, or there might be R&D in that. So there's those sorts of routine software development steps that in themselves aren't R&D, but if you're trying to do them differently or in a more complex or fast way, there may be R&D associated with that.
So if you took the perspective where you try and develop that potentially as a product for other people, and in that scenario, then that would have potentially more chance of being claimable?
If you're
Well, not necessarily. So if you're going to develop that, if you developed an algorithm and then you said, all right, we can probably sell this to other people, so you're bringing a new product to the market, would that then help that claim?
If you're developing something that's quite innovative and different to what's been done before, then it's potentially going to have some R&D. It's very difficult to say until you talk to the specific case.
I don't know how many conversations we've had with Alex.
Yeah.
Or some creative answer that comes out at the end where it helps.
Normally after a bit of a discussion we can get to the bottom of it.
Yeah, makes sense. So
I think just to add something to add to it is like you ask yourself a question: what it was like before, and what is it like after you've done the project? And what was before is actually that's what your knowledge base or level was, and also probably the industry knowledge base was.
yes,
And then sort of after you've done that project, you have that delta. You stepped up and hopefully not stepped down. But failure is actually good for claiming R&D. If you actually said, by doing this, we can actually improve performance of our system, double the performance, and then actually prove the opposite. Actually, the system performance degraded. That's a failed experiment. So for R&D, failure is actually almost like it's a good thing, because you can actually demonstrate that that not every there was uncertainty in the outcome. You just like you went there blind. You had a hypothesis and it failed miserably. So from that point of view, any mishap or a bug that is difficult to figure out why it's happening. Even I remember the project that you were doing where kind of there was a court case of Oracle against Google, and they actually I think it was to do with Java libraries or H files.
Then it was Java, and then the Netscape API or something got shut down.
Yeah, and that created an almost roadblock for you as a showstopper. So you had to come up with a solution that is actually previously was reasonably straightforward, and now you actually have to find your way out of the wilderness. So from that point of view, any challenge that suddenly comes up, no matter what causes it, you had to invent something along the way to get yourself out of trouble.
There's also another criteria that's really important in software, and that's the internal business administration test. So you can't be seen, it's not eligible if you're doing software development for internal business admin. So developing a better payroll system for your employees, or a better HR system, or SAP, those sorts of things for an internal use aren't eligible. So you'd want to be able to see that there's a link to something that you can help customers with, or
something commercial would obviously
If you
help them.
commercialise it, then that opens that door. Okay.
So if we dive in a little bit about what R&D Tax Incentive is, how, like we've talked about being a company makes it eligible, what the cases might be. You've mentioned core activities here. What's a core activity mean within the R&D Tax Incentive? What does that actually mean? What is core? Is that what I'm testing?
Yeah, so there's two types of activities we can claim for. There's core R&D activities and support R&D activities. So you need a core activity to be able to make a claim. That's your starting point.
That's the experiment.
Exactly, that's your experimental process. So, and you can have a number of core activities. You can be doing 10 things, or you can be doing one thing. And you assess them one by one. And then on top of that, you can also claim for any supporting R&D activities. So that might be testing or project management activities, documentation, background research and preliminary investigations. So all the time you spend doing all those other things, team meetings to discuss the R&D, that can all be claimed as well. So you can claim a combination of both core and support.
Now, support, can that be, I think we've sort of had this discussion before, so you might be building a core activity, which might be building this new way we've got an AI model, but then around that AI model, we have to deliver that in a frame of something that's rudimentary software development. Would that be seen as a supporting activity to deliver the new model that we're building? How does that?
If it's necessary to do that, to undertake your, or to complete your core experiment, then it's more than likely that's something you can include in the claim. There are probably specific exclusions that you need to take into account, but broadly, if it's something that you need to do to complete your experiment, then we'd look at including that in the claim.
Okay, very good.
Yeah.
Now, what type of businesses can do this? So I'm a technology business. Does it matter what size I am? Does that impact the type of claim that I can generally look for?
So there are essentially the R&D tax, the government programs that actually we're talking about is called R&D Tax Incentive. And R&D Tax Incentive sort of, there are two parts to it. One for the smaller companies, and the smaller companies defined as having turnover, which is sales, revenue, under $20 million a year.
Okay.
So for those ones, it's called, under current rules, it's 43.5% refundable tax offset.
Refundable tax offset. Okay. What does refundable tax offset mean to some people listening out there?
So the refundable tax offset is actually the benefit itself that actually associated with it is it's quite an interesting concept. The benefit, just to say that the benefit for the companies can vary depending on their tax payable position.
Okay.
I think in the best case scenario for companies, that's where they get the biggest benefit, is actually when you're a startup which actually has no revenue and has incurred a lot of losses in their operations.
Okay.
So that the benefit can be 43.5 cents in a dollar for every dollar spent on R&D.
So I spend $100,000 on R&D. If I'm in a $100,000 loss, I can get $43,000 and a bit
That's
back.
correct, yeah.
Okay.
And
so
then you can
incentive.
put, that's right, yeah. And you put this, if you just think of it almost like a compound interest, like if you get this $43,500 put back into the project, next year you can claim again 43.5% or 43.5%.
Yes.
And next year, whatever remains out of it. And so if you actually add it up, then for every dollar that you actually spend, you end up with something like 70 cents of a refund that actually get over a number of years. It's better than the government grant.
Yes.
You know, you apply for the government grant and you get, like, you have to have, like, usually it's co-founded. You have to, for every $100,000, you have to put 100,000 of your own, plus the government grant is considered to be a taxable income. So it actually,
is it?
Yeah,
Oh,
so it
that.
actually it's also a taxable income. When the R&D tax refund is actually, it's non-assessable income, so actually you don't have to pay tax on it again.
Interesting.
So it's a very, very generous program, and any startup that is not utilizing it, or at least haven't investigated whether they're eligible, is doing themselves a disfavor.
Oh, that's a lot of money in terms of, in terms of if you start out with a couple $100,000 in a business and investing all that, you can get 70 cents of that back, which is a significant amount of money over that time. So it can make a big impact in terms of how much runway we have in terms of getting your product to the line. So yeah, definitely worth investigating if you're out there. So I'm under $20 million, I can get 43 cents in a dollar. For those that are a bit bigger than that, they're in organisations building product, what does it mean to them?
Yeah, so I'll be talking about like what it is now and also what it might be later in the future, because currently there is a legislative change that has been proposed, and if it happens, then it actually becomes a little bit more complicated. But what it is...
Before we jump into that, what happens if you're making a profit? As a small business?
If you're making a profit as a small business, the amount of cash refund actually decreases.
Yep.
But the benefit is actually you're paying less tax.
Okay.
So, and depending on your position, so the way to explain it, it's a bit of a mouthful. So up to the amount of losses that you have, you get 43.5 cents in a dollar. After that, your benefit is actually 16 cents in a dollar at the moment. It might actually drop down to 13.5 cents in a dollar, but it does still provide a substantial saving for you.
Yeah, so if you, in the same situation, if you had $100,000, you can get $43,000 off your tax.
No, in a long...
16.
No, $16,000 off your tax.
Sorry, I said that wrong.
And for large companies, the offset, so instead of being 43.5 cents in the dollar, it's 38.5.
Okay.
So the net benefit there, so the equivalent of the 16,000 if you're tax paying, is 8.5 cents in the dollar.
Okay.
So that's not refundable, that R&D tax offset. So if you're in losses, there's not necessarily much.
But it adds up to your losses. So
Yeah.
essentially, these losses can be utilized indefinitely. So
you carry it forward.
you carry it forward. So if
to
you're
when you're
going to be
tax
making more profits, you can actually say, yeah, let's keep on making this R&D claim because one day we're actually going to
start paying tax.
and then these losses become very handy because they actually have a value. They're saving us
Every year.
every year. And actually, currently there is an interesting tax bracket between $20 million a year and $50 million a year companies that actually turnover where the benefit is 11 cents in the dollar.
Okay. So there's all different varieties, but the best place to be is one of the scariest for a startup is making no money, spending money, and you'll basically get 43 cents a dollar. That's the best place to be.
That's
okay. So it is it's definitely something worth looking into if you're in the brink of building a product. It will give you some clear additional runway moving forward.
It's also from the point of view of if a lot of startups looking for investors, and essentially if you tell the investors that you already kind of done your prep work and actually you already established your sort of R&D tax claiming and you understand the process, actually for investors the big ticks, like actually it gives you more runway, but also tells the investors that you actually you are sort of on it.
Yes.
Thinking commercially about how to get the most bang for your buck for research that you do.
Oh, if investors putting 100,000 in, it's worth 150, 170 in some cases, and it's obviously better for them to get it. So what are some limitations if I hire contractors, for example? If I develop some stuff overseas, because people do that, what does it mean to my R&D tax incentive?
So if you hire a contractor to do R&D activities for you, there are two areas of the legislation you need to satisfy. One of them is called on own behalf, so that's being able to demonstrate that the contractors are working on your behalf. And the other one's around expenditure not at risk. So I'll just go into those. On own behalf, you need to be able to demonstrate 3 key criteria. So normally we look for being able to demonstrate that you're bearing financial risk for that work. So are you paying them a fixed fee to go away and develop a product and come back? You give them a specification and they come back and you're paying a fixed fee for a product. Or are you incurring that work at a time cost? Are you paying for a set of resources to do development and augment your team?
Okay.
So a time cost is much more time and materials indicative of a financial risk. The next thing is around beneficial ownership of the IP. So you need to be able to demonstrate that you've got the ability to commercially exploit your IP after it's been developed.
Okay.
That doesn't mean formal ownership of the IP, so just the ability through an exclusive or non-exclusive license to commercially exploit it.
So as long as you can commercially exploit, you're okay.
Yeah. And the third criteria is that you drive the conduct of the R&D activities. So day to day, you influence how that project progresses, whether it's through choosing specific resources, choosing what activities those resources are doing, driving the way that the R&D is being undertaken. So they're the things that are really important to look at when you're working with a third party and they're working on your behalf.
So you're really a part of that process. You're not just
Exactly.
here's an outcome, go do that for me.
You're not asking them to develop a product for you.
Yes.
You're asking them to help you develop the product.
Get it.
Bit of a difference there.
Yeah, in terms of being in the space, we understand the difference. Like a customer may come to you, or if you're building a product, you might say, these are my fixed outcomes. Build this for me and come back in 6 months. That's not going to really play it out, but it's more of that hands-on approach and helping them and guiding the process as well.
Yeah.
Okay.
The other criteria there is the expenditure not at risk part, and that's being able to demonstrate that if the R&D fails, that you're on the hook for the cost of that R&D.
Yes.
So we'll look at the contract. We'll talk around the liability of the R&D and who's at risk if you have to go through the process of development 3 or 4 times, and how does that work?
Okay.
The same happens if you're on the flip side. So if someone's paying you to develop something, those considerations also come into play, but on the opposite. So are they paying you a fixed fee to develop a product, or are you really helping them as a team member develop that product? Those sorts of things, it's the same criteria, but on the other side.
Yes, as a development firm, if you're doing fixed price, the risk is on you.
Yes.
Whereas the risk is not on the client.
Yes,
yeah, and then it's the opposite for them. Yep.
Yeah.
That's probably one way to look at it. If you're providing you're a body shop, you're providing people like labor for hire.
Yes.
Then whatever things they do for the client is actually it's a client's R&D. On
Yep.
the other hand, if you sort of quoted a fixed fee for a product and you know that in the process you'll have to do some R&D and you're on the hook, because if you incur overruns, you have to incur warranties, you have liquidated damages. I mean, we looked at lots of contracts and there's a whole spectrum of different conditions where they can get you if things go wrong.
Yeah.
And that's like most of the time things don't go wrong and people think, oh, it's always smooth sailing. But, it's almost like, people in a restaurant, they come in and, the waiters come in and they serve you dishes and everything's perfect. You go to the kitchen and, like all sorts of hell is breaking loose there.
Yes.
That's where the chaos is.
Yeah, that's where the chaos is. And you have to sort it out. You have to deliver on time. You have to deliver sort of nicely packaged and nicely presented. So from that point of view, if we can demonstrate that that's what actually happened and is different to the routine engineering that, that people are just paying you per hour and you just keep on doing it, doesn't matter what's going to happen at the end.
That is another benefit of doing an R&D tax incentive claim. It makes you think carefully about working with third parties or being contracted to do R&D. It makes you think commercially about, well, what are the risks for me as a company and, is it my IP or their IP? So it's quite interesting when you get into those sorts of conversations with clients.
That's probably something you need to consider very early on, right?
Yeah.
Is to make sure it is some access to at least your IP.
Yeah.
And most people
especially-
probably overlook it without even giving it much thought.
Definitely.
I think early days when we started out doing what we did, I think people did overlook what IP meant. I think people just perceived that they would own the IP and just moved on. And then soon stories started to come out that technically no, your developers are like an author of a book and they own the IP if you don't hand over the rights to it. And then people started to get a bit more savvy around it. I think it's changed the conversation around IP. I think every single person that comes to me, about 9 out of 10 ask about IP now.
That's
Whereas
good.
when we started, 1 in 10 would even ask or even consider asking that question. So the model has changed and people are starting to perceive IP as important, which of course it is, but understanding that they actually own the IP or
And
some form to actually commercialise it.
At that point, they didn't understand what IP was
Correct.
or what developing software from our perspective meant for their idea.
There are a lot of synergies between IP and R&D tax around, if you're developing something new and you want to patent it, you need to understand what the prior art is. You need to know what's out there in the public domain and how you're able to differentiate from that from a technical, very technical point of view.
Yeah.
Yes.
So that's often the same conversation we're having from an R&D tax point of view.
Get it.
I think one of the examples, I might have actually even said it to you in the past, is where sort of to articulate is there is a very famous patent about the zipper.
Yep.
Oh, yes.
So the zipper is been invented by an American inventor. He patented it, but the first version of it was just had little metal fingers that actually go into each other, and that kind of worked, but not 100% because at some angle when you try to pull it apart, it actually would go undone. So the same inventor kept on thinking about it, how to actually do it, and eventually he came up with the concept of a dimple. So it's actually this little metal tongue that actually he put a little dimple in it, so it actually became the bump. The dimple on one side went into a little dimple on the other side.
Yes.
It actually created like an interlocking pattern. So if you look at the metal zippers, you actually will be able to notice. So what he did, he patented a dimple.
Oh, okay, but not the zipper itself.
Because patented the zipper before, so essentially,
Interesting.
he then patented a dimple in it, and that's what made the difference, So from that point of view, what we are trying to do is trying to get our clients to articulate what the dimple is, how you're different to, something that is kind of almost there but not quite there.
So it doesn't have to be a new revelation. It can be just a slight twist on what's actually
No,
but
true.
that twist is
improvement.
actually
Non-trivial. Non-trivial.
Get it.
that's that twist that what makes it possible. It's like what's it called? In Back to the Future, he says, that's when I invented the flux capacitor. That's what makes the time travel possible.
Yes.
What's that little novel thing that makes it work?
Yes. Yeah. No, it makes sense. So I think we haven't mentioned this though. So I'm setting up a startup and I go, contractors you mentioned, but what happens if my contractors are not in Australia? Does that impact what I do in R&D claim, or is it still okay?
So if your R&D is, or your core R&D activity is being undertaken in part or wholly overseas, you can claim it, but you need what's called an overseas finding upfront.
Okay.
So that's effectively seeking upfront agreement with the regulator Oz Industry for claiming those R&D activities. It's a bit more of a detailed process. It is quite good because you get upfront assurance of whether or not
You're actually
it's
going to get it.
qualifying.
Okay.
And then once you've been through that process, you can include the costs in the claim.
Interesting. Okay.
But they're not something you can automatically include.
Yeah. One of the limitations of like simply going to the regulator and saying, hey, we've got a dev team in some Asian country or South, Eastern Europe.
Yes.
That in itself will not get you an advanced overseas finding. You have to demonstrate that the skills that you're getting there are not present in Australia. You can't, or skills or facilities or some other limitations, like, for example, in medical research, like Australia might not have the advanced medical facilities, or we might not have the population samples that actually needed to be proven that actually it works across different genetic profiles.
Has to add value to the claim.
That's not just because it's cheaper.
Yeah, it's not because it's cheaper.
Yes, exactly.
So if you have, for example, software developers, let's say we haven't got software developers that can actually do certain, they lack certain skills, but in order to demonstrate it, you have to probably go to SIC and sort of advertise it for probably 6 months, saying we're trying to get this skill, we can't get anywhere, trying to get it, we can't get it for love of money, and then sort of we say, but we can get that team, highly skilled team in India or in Russia. So.
Yes.
So in that case, you have evidence, because otherwise the regulator, and that's the reason they do it, because it's actually the whole program is there to promote development of like innovation in Australia.
Within Australia.
Within Australia, using Australian resources.
The starting point for any claim, but particularly where you've got a complexity like an overseas finding or working with a third party, is talking to an R&D advisor. It's just really important to sit down and go through all the nuance, because there are a number of complexities and nuances to the R&D tax legislation. So we've done overseas findings for our clients, so it's quite an area that we know well. So it's definitely good to have a chat first.
So definitely talking up front, because if that was the case and you went down that road, you couldn't actually claim.
That's right.
Yeah. So
Don't wait for the financial year to come around.
No.
Yeah, exactly.
Yeah. In terms of when you are claiming, is there certain time periods that I have to claim in? Obviously, that is up front. If I'm going overseas and doing some stuff there, I need to get that approved. Yeah. If I'm in Australia, what sort of time periods do I have to claim on a previous year?
Yeah, there's two key parts to an R&D tax claim. So there's the technical part, which is called an application for, will you register your R&D activities? So an R&D registration.
Yes.
That you lodge with Oz Industry to effectively regulate whether or not your R&D is eligible from a technical point of view.
Yes.
And then there's the tax side. So once you know which projects are eligible and you identify your R&D expenditure, that forms part of your company tax return in what's called an R&D tax schedule.
Yep. Okay.
So the R&D registration is due 10 months after the end of your financial year. So say you're a June year end and you're wanting to claim for June activities up to June of this year, so June 2020. You've got until April 2021 to submit your R&D registration.
Okay.
But the thing that really drives when you're going to do your R&D tax incentive claim is when you want to lodge your company tax return. If you say are a startup and you're in lots of losses and you want to access your cash refund as soon as possible.
1st of July.
1st of July, perhaps. You know, you'd probably want to prepare your R&D registration well before that April deadline. So you'd probably do it, you know, in July as soon as possible after year end. So it really just depends on the company and where you're at from a tax perspective. And
now we've talked about when. So what is the actual claim itself for people that don't know? What do you have to do to lodge a claim?
Yeah, okay. So the R&D register, so the first thing you do, I mean, if we talk about what our process is, how we help our clients, if you engage an R&D advisor, R&D Tax Incentive Advisor, so you'll sit down with them and work out which of our activities are eligible and work with them to write up a project description that explains to Oz Industry and the ATO why they're eligible. And then that forms part of your R&D registration. You also put other information in there about the cost of the activities, but mainly company information.
Okay.
And you register that with Oz Industry. That's the first part. And in the background, we also prepare the R&D tax schedule, and then that forms part of your company tax return that your accountants lodge. That is the claim. If you're tax paying and it's acting as a non-refundable tax offset, it just effectively reduces the tax you pay. And then if it's a cash refund, that will get administered by the ATO.
And as a business, what sort do we need to provide supporting material? I know from our experience, we've had to provide times and costs, the write-ups, the descriptions, what problems were identified.
And that journal that you alluded to a little bit earlier about how you document it. So what do you need to provide?
So the more technical documentation, the better, obviously, because that will help with writing up the R&D project description. So you only need to lodge the description itself with Oz Industry initially, but they actually can request additional technical information if they want to know a little bit more. So that's called a request for information, or effectively an audit of the claim. But to actually make a claim, all you need to do is lodge the description of the R&D activities. So that's on the technical side. On the expenditure side, you'll need a bit of information to work out how much R&D has cost. There's a few things you can include in the claim. The main thing people include is staff costs, so time. Ideally, that's in timesheets where you've recorded the amount of time you spent on those R&D activities. And you can include base salary, on costs like superannuation and work cover. So that's the time element. If you're contracting R&D activities out and they meet those criteria we discussed before, then you can include those costs incurred. Other costs might be feedstock costs, so not so common in software. But
Feedstock, did you just say?
Yeah,
feedstock.
Okay. Yeah.
I thought you did, but I wasn't quite sure.
So if you're an engineer building a new or mechanical device, I don't know, a med tech or something, medical technology, you can include the cost of prototype materials, so things that you build and scrap or use in trials. I'm trying to think what else we can include, and also overheads. So company overheads is another interesting area. So if you're using your offices like you guys are to do R&D activities, you may be able to include a proportion of your rent and your power bills and other expenses that you use day to day. I think that's all the areas.
Yeah, one of the things that becomes more and more important, and I think the regulator sort of decided to tighten up the rules a bit, that actually the emphasis on substantiation and documentation. I suppose when you deal with the tax office, when you deal on financial matters, unless you have an invoice, unless you have a receipt, there's something to prove that you actually incurred that expenditure. That without it, even if you can demonstrate that you've spent the money but have no receipt, it will be rejected, and it's kind of accepted by everybody. Unfortunately or fortunately in R&D tax so far, that was a bit loose because there is no equivalent of a receipt. So certainly the invoices are still invoices, but for example, like if a person spends their time on something, you have to think about this journal or lab book or a Jira or whatever, Confluence, whatever system that you actually use for recording your journey through the project. Think of it as an equivalent of a receipt. So somebody says, you claim that person's time, times $100 an hour, is you're claiming through R&D, and therefore you can get 43.5 cents in a dollar for it. You better kind of show us some substantiation document to prove it.
Companies are being a bit more proactive in the way that they prepare these claims, and especially if you engage an advisor to help you with it. It's about working with them during the year as you're doing the R&D activities and working with them to identify what's the documentation we already have and what tiny improvements can we make so that it really satisfies those criteria.
So
it's not often a huge task.
No, imagine not. It's something you're doing day to day if you're actually keeping track of time logs, and majority of businesses are, especially if you're in the development world, developing product, there's Jiras, there's tasks, there's something that you use.
Commit logs even probably.
Yeah, so that can actually help from the perspective of what people are doing. So now you mentioned a few times advisory, so tell us a little bit about RnD360 and what you guys do and how you guide customers or clients on this journey of claiming for an R&D tax incentive.
I suppose it always starts from kind of the first discussion and understanding the customer's business, and because all of us came from a technical background, and
I think that's a huge advantage because you're not talking to people that just have no technical background. It's going to be hard.
The questions you've asked me over the years, Alex, are very technical.
Above our heads sometimes.
It's not an accountant asking me questions.
Yeah, and sort of trying to tease out, and what we're trying to do, we certainly use legislation as our guide, and provided you comply with legislation, you have no problems. And I think part of this technical discussion is actually trying to tease out these technical details that I know, for example, from my own experience, the technical person is so focused on it that you think it's like it's normal, you know. It's, but in reality, what's normal for you, it's not normal for even your industry colleagues, because you're working on a very specific project with very specific challenges that probably nobody else tackled before. There's a lot of uniqueness in software development that's identified as dimples that actually allow you to say we're not doing routine development anymore. You know, we just went beyond the pale, so to speak, of routine development. Identifying them and then building a story. And I said, we initially thought it was a walk in the park. But as we keep on walking through the park, somebody dug a trench. There was the wolves sort of suddenly came out of the bushes. Chasing us around. We have to sort of call for help. And this sort of story you have to tell eventually, how you sort of deliver the product to the client. The other area, of course, is actually identifying whose IP it is.
Yes.
Because there is a kind of a bit of a tension there that exists between an organization like, for example, yourself and your customer. So on one hand, you kind of specialize in delivering certain types of systems for customers and you became good at it. So that's why the customers come to you. But then the customer gives you a contract and says, anything that you develop belongs to us. And that's kind of think, really? That you can download the content of your brain to them. So from that point of view, and then even if you develop something really innovative for them, you're not able to actually develop something similar, not competitive, but for another industry or another client. So from that point of view, articulating these things and saying, for example, in one of your projects, you kind of developing a game for a client, but in the process, you develop a really interesting method how to actually make this generic for any game. So the client really is not interested how you can do it for any game. He's interested in his outcome, his own game. But in the process, you've developed some really interesting technologies that actually can be allow you to develop the game in a fraction of time that it will actually previously and look different, but at the same time the mechanisms, the engine behind it is different. So articulating these bits, because if you don't look at it from that angle, you probably will never kind of think of it that way. But once you see it from the other side, it's almost like having a lawyer sort of working on behalf, finding an interesting angle.
In terms of the way we work, if you're a developer and you've got a great idea out there and you think you might be able to make a claim, the starting point is just a catch up. We work across Melbourne, but also Sydney and Tasmania. So we can, if you're in those areas, we can meet with you face to face. If not, Microsoft Teams is pretty handy.
Yeah, it does the job, doesn't it?
So it's normally the starting point is around a very high level discussion to talk about all the things we just talked about today. Do you broadly satisfy those sorts of criteria? If you do, the next step is normally two parts. So technical, so meeting with the people actually doing the dev, talking technical, getting to the detail and understanding, making sure that it does meet those criteria. And then working with the technical person to prepare the project descriptions and the R&D registration. We also, on the other side, talk to either the accountant within the business, or business manager, or business owner if it's just you, to get the costing information we need to do the claim. So we might meet with you once or twice as part of doing a claim, but for a lot of clients we meet very regularly. We're part of the R&D process or life cycle, so we'll meet with you, come in quarterly if it's not too big a burden, have a chat about some of the new R&D that you're doing and document it with you in real time or help you document it in real time. So that's sort of the way we work.
And what's sort of the cost to engage an organisation like yourself? How does it work in terms of structure?
Definitely depends on an array of variables. Broadly, it depends on the amount of work. So the number of projects that your activities you're claiming for will drive how much work's involved in preparing the claim. size of the business, if we're talking 500, 5,000 employees, the work
Yes.
to prepare a claim for a company that size
Can
is
vary,
obviously
yes.
quite
Yep.
different.
Okay.
And we offer different types of fees. So we, more often than not, we're doing a fixed fee. It's sort of based on the amount of time to do the work
Okay.
on our end. But some clients prefer a contingent fee or a hybrid of both, or time and material. So it really just depends on,
Okay.
on what they prefer.
So if I'm a startup about to venture into building technology or a business, what do you recommend? Talk to some R&D people, get up like yourself straight away, or just get into the process and see how you go?
The sooner the better.
Sooner better.
We talk
Yep.
to people who have ideas that haven't even started a business yet, and
Yep.
it's been, and down the track, it's been central to the success of them working with a third party or
Yeah, it's interesting.
commercialising their IPs, putting the structures in place early on, and also planning how much they're going to spend when they're fully cognizant of what the R&D tax will give them back. You know, if you know how much you're going to get back, that really can drive what types of costs you incur and how much you incur.
Yeah, it's interesting. It changes your decisions and your perspective. At least even from a business perspective, when you think about R&D and what it means, it changes the way you approach things as well.
Yeah.
Because you might look at your project in a trivial way, but then you might consider, what about if we did this? We would be eligible. R&D would be a bit more risky, but a bit more venturous in terms of what we're doing, and give us maybe more credibility in the marketplace. So it changes your perspective on the way you approach things. So definitely recommend reaching out to guys at RnD360. So we've covered quite a bit today in the conversation. Alex, Caitlin, anything else that you think we could add to this, or anything that people need to consider especially in the startup space?
So particularly for startups, there is relatively recent initiative that the Australian government sort of introduced called Early Stage Innovation Company, or ESIC.
ESIC, which is...
ESIC.
Okay. Yeah.
So ESIC is, there's always a bit of a criticism of Australian government support for startups, that they're saying like investors have got no incentives to actually to invest in startups, because there's really nothing out there. There's nothing to incentivize them with.
Yes.
So after a lot of to and froing, the ESIC sort of program was born. I think it was about 4 years ago when actually it was first introduced.
Okay.
So the idea there is actually the company needs to qualify to be an early stage innovation company. So there is a government website that actually says what this company is like, but usually it has certain criteria as far as when the company was established, how old it is, also how much revenue it can have before qualifying or not being eligible to be an ESIC company, how much investors can actually contribute as a maximum amount to it. There is and how long sort of the benefits are actually going to last. So the way this program actually currently is set up, an investor in an ESIC company gets a 20% tax offset from their normal assessable income. So for example, if your high net worth individual and you're paying, like say, 50 cents on the dollar, and you invested $100,000 into an ESIC qualified startup, you will get $20,000 off your assessable income.
Okay, so there's some value there.
So it's immediate value, but the real value is actually in the second part of it, which is a more longer term. So there is a short-term one,
So short
and
term
the longer
will be
term one.
around $10,000
Yeah,
saving.
that's right. Yeah, $10,000 saving. The longer term one is actually if the company eventually becomes very successful and you're able to sell your shares in that company within 10 years since your investment, you will get your shares capital gains free.
In total.
In total.
Oh, wow.
Yeah,
Wow.
in total.
Yes.
So essentially, normally you would have to pay at your top marginal rate, which is like 50 cents on the dollar after you kind of sold your shares. Well, actually, not 50. I think it's 30.
Is it still like half, and then you pay tax on half? Is that generally the way you work it out? So half of it's tax free, and then the paying tax on half.
That's probably
generally?
because it's such a fluid area of legislation. It's probably better to talk to your tax advisor what the normal treatment of your tax shares is. But from the ESIC point of view, essentially, if you sell those shares that are qualified, when
Yes.
you invested in the company,
Uh-huh.
while it was still an early stage innovation company,
So
not
you took
later.
the risk. You
Yeah, you
invested
took the risk,
at the
you
early
invested.
stage.
So these shares will be actually
Uh-huh.
tax exempt, capital gains tax exempt.
That's a huge benefit for investors
Yeah.
out there and
Massive
even
reward.
organisations.
So
yeah.
essentially, you are considered to be R&D tax
Mm-hmm.
and ESIC for any startup as a part of, they call it a startup hygiene or
Mm-hmm.
R&D hygiene. Any investor that sort of comes in
Yes.
and checks you for, have you done
Uh-huh.
R&D tax, have you done ESIC application,
Mm-hmm.
if you qualify, of course. I mean, there's some
Yep.
startups that might not,
Yes.
but that's the first thing that
Mm-hmm.
an investor. Nowadays, investors are pretty sophisticated. They will actually check you out
They'll
straight
want to
away.
know that.
Yeah.
They
Yeah.
want to know that. So,
Interestingly, the two work hand in hand as well, because
Mm-hmm.
the R&D tax can help you qualify as an ESIC company.
Oh,
So
okay.
that's something that's where we come in,
Yeah.
obviously helping you with the R&D claim itself. But there are a number of criteria that you need to consider and need to meet to be eligible as an ESIC company. But that is one of them, and it is one of the more helpful stepping stones. So we don't need to go into the detail of all of the criteria
Yes.
today, because there are
Yeah.
different ways you can qualify.
Okay.
But it's definitely something to have a chat to us about if you think you might.
Yeah. Definitely a great tip for any of the listeners out there.
Yeah,
who are in
looking to
startup
raise
land.
capital, it's going to
and
help.
also
obviously.
about the strategy, because there are pretty strict criteria sort of while you the moment you stop being an ESIC company, like for
Yes.
example your revenue exceeds, let's say, $1 million, then I can't remember exactly, it could be 300,000, it could be $1 million, then after that you stop being an ESIC company. So any shares issued after that sort of cut-off point, they're no longer eligible for the benefits.
Get it.
So essentially you have to be very smart about when you're going to cross that threshold and potentially get investors on board earlier
Yes.
before you sort of do it. So it's part of the strategy and just seeing the timing. Sometimes it's really can save companies and investors a lot of money by simply just knowing the rules and complying with them rather than just being baby in the woods and getting lost there.
Just how to play the game, really.
Yeah.
It all is a game, and if you're a part of that ESIC accreditation and you've got shares in that, then if 1 in 10 work, you've just doubled potentially your return. So that makes it 1 in 5 all of a sudden. So very interesting in terms of what that could mean. Alex and Caitlin, how can people find out about you if they want to get access to what you're doing and have a conversation?
So we can definitely provide if we reach out to you, I'm sure we'll put a link with our contact details
we will.
with the podcast.
Yes.
We've got a great website, so have a look at our profiles and give us a call
Perfect.
anytime.
That sounds good. Alex, Caitlin, thank you for joining us. Really appreciate you coming in today and just sharing a little bit about R&D Tax Incentive and what that might mean to a business.